right. How are we feeling, panel?
Great.
All right, I'm going to keep everyone on point. And if you become boring, I will cut you off and move on. Challenge. So I'm excited to be here. We have with us today Austin Federa, who's working on DoubleZero. We have Sam, who is building WhiteFiber. And then we have Kerri, who is the strategy master. Oh, I'm sorry, you're the evil overlord of WhiteFiber, where we're giving ourselves fun titles. And then Kerri is the strategic mastermind at TeraWulf. So we have a panel of true domain experts who operate at the edge of digital infrastructure and physical infrastructure. So I'm going to give you a little bit of a frame, and if you're awake tomorrow at 9:30, I'll be back here for 20 minutes talking about this frame. But as we're all learning, digital infrastructure relies very heavily on physical infrastructure. All throughout this conference, you're going to hear from a lot of incredible projects and founders who are building in cyberspace. They're building things in the digital realm, but nothing they do would be possible without what these three panelists here on the stage do. In this panel, we're going to talk about infrastructure, not as protocols or crypto infrastructure. We're going to talk about it as compute, data centers, connectivity, fiber, telcos, and storage, which is memory. But we're going to focus on just compute and connectivity. Memory is usually packaged within a data center or within the device itself. Why is this relevant? Why should you care? Let's talk about public markets. Bitcoin down 10% on 2025. What outperformed? Anyone?
NVIDIA.
Miners, semiconductor companies, and energy companies, right? So if we look at where value accretion is happening, the returns to physical infrastructure and companies in that value chain have greatly outpaced the returns to enterprise SaaS, software, crypto. So history is a helpful guide. We're going to talk a little bit about the ISP boom and the dot-com era bubble. And Austin's going to offer us some insights from the DoubleZero angle. We're also going to talk about the Bitcoin mining boom. Some of us here may remember the ASIC financing bubble that imploded in 2022. And there are some really interesting lessons in there. So without further ado, I want to start with the past. We'll talk about the present, and then we'll talk about the future. Does that sound good? Well, about 35 minutes. If you have questions, I have this little notepad. I'll be watching your questions. I'm going to try to weave them in, or feel free to raise your hand. I think we're happy to keep it casual and chatty. So Kerri, I'm going to start with you. TeraWulf's an interesting company because you've always, even from the earliest days, focused on the energy component of your infrastructure. Can you talk a little bit about how Bitcoin mining has changed the way that grid operators view flexible demand loads and where it works and doesn't work in terms of Bitcoin mining versus AI data centers?
Sure. So at TeraWulf, we build the data centers that house compute. And originally, it was Bitcoin mining. We launched our company publicly in 2021. And we've now converted, and we are building data centers for AI HPC. I think what Bitcoin mining taught grid operators is that you can have very large loads that you can turn up and down very quickly, which was very different. Typically, you have a large supply, a power plant, that ramps up and down to follow demand. And now you have this, what is now an asset to the grid, especially now that you have all these intermittent resources, whether it be wind or solar. You have a 100, 200, 300 megawatt asset that can follow the grid. And so in times of high demand, you can turn it down. It's naturally incentivized to follow power prices because power is the single largest component of cost to mine in Bitcoin. And so I think it gave the grid a tool with a very flexible load. Now, as we take that into AI HPC, historically, that has been up, and they call it the 5 nines. It runs 99.999% of the time and is the opposite of flexible load. But I think what we're learning, particularly in how valuable we saw Bitcoin mining to grid operators, is that not all compute is created equal. There is some compute, like model training, that can take weeks, right? Those types of workloads can pause or be turned down without a lot of disruption. On the other end of the spectrum, there are real-time services, inference, banking, those types of things need to be available 100% of the time. But if you think about the demand projections, and if there's ever going to be a realization of that level of demand, AI and HPC is going to need to be more flexible. We got to figure out a way to do that. And that may take years. And in the meantime, I think what you'll see is designing sites around enabling that redundancy. So bring your own generation, BYOG, have a backup, have a grid connection, but also have your own dedicated generation on site. You can see that with battery storage as well. And so that's how we're at TeraWulf trying to take our energy background and our experience in mining and helping to influence and think about how we're designing our sites today and how we're interacting with the grid.
Mm-hmm. I think that's very relevant. Even this week, President Trump in the US came out and said that data centers would have to meet their own energy demands. Mm-hmm. There's a lot of concerns about rising power prices on the grid. Huge advantage for you to have that experience and that capacity to do that effectively. Sam, you are also in the retrofit camp here, and retrofits have been a core differentiator for your business. So you find an existing brownfield site and you convert it into a data center. You converted a mattress factory, I believe?
Yes, we did.
So I'd love for you to tell us how you drive time to market, right? That's one of the most important factors. People are buying very expensive GPUs. They're getting on the waiting list for the latest and greatest from NVIDIA. They got to get those GPUs housed somewhere. And what factors are people here in the audience maybe underestimating when they're thinking about a retrofit versus a greenfield data center build?
Yeah, and just to take a step back, greenfield builds are basically starting from scratch. You buy land and you just literally start from scratch to build a data center. We don't like that approach. We use an approach called retrofit, where we buy for example, a mattress factory, which is what we did early last year in February, and we converted that into a tier 3 data center within 6 months, ahead of schedule, on budget, for a very sophisticated client, Cerebras.
Sorry, and Sam, could you specify what tier 3 means? Kerri talked about 5 nines, but maybe just specify what that means.
Yeah, there are different tierings for data centers. Tier 4 is like military grade. Tier 3 is really what is like the second best, which is really what you need to build for AI compute. And then the lower you go, counterintuitively, the lesser the requirements are in terms of redundancy and so on. And so when you have like uptime, you have to go higher in the tiering. But so I hope that's clear. But with respect to retrofit, we have 4 sites, 3 in Canada and 1 in North Carolina. The latest one that we built, that we chose, was a textile factory with 99 megawatts associated with it. And now we just announced our client just a few weeks ago, and Scale was an $865 million contract over 10 years. And so that for us, that to us is the way forward. They choose us because of our retrofit model. We can get things up and running in 6 months rather than 2 years, which is what it typically takes for a greenfield. And that reduces duration risk, that reduces project delay risk, which is a very real concerns that clients may have. So we built this reputation of getting things up and running and on time. We have over 20 clients at the WhiteFiber business. And so that reputation of being the retrofit kings has been really a big advantage for us. Another advantage is that when we look at these facilities, they're marketed not as potential AI data centers. They're marketed as just an abandoned, say, mattress factory or an abandoned textile factory where things have gone to China or Mexico. They're not marketed as potential retrofitted data centers. So we take advantage of that. And we have a very special team that we acquired a couple of years ago for about $48 million that have a retrofit formula. And so
I love this, a nice little market arbitrage you've cornered.
Exactly.
I'm going to move on to Austin here. So we had a lot of fun collaborating with your team on our data center report. I'll also disclose I am an investor in DoubleZero and proud supporter. But access to high-speed connectivity is a really primary consideration for all data center developers, right? It's a big consideration for your tenants. Give us a quick overview of why fiber matters, and maybe talk to us about why you chose to build DoubleZero as a protocol as opposed to an ISP or a company. I think that's a really important distinction.
Yeah.
Let's start with, why does fiber matter? Just give us that background.
Sure. So if you look at the history of how most technology companies evolved, there's strong co-location incentives. And the co-location incentives, until you get to the scale of a company like a Google or a Facebook or an Amazon, really can be met in one or two data centers or a data center campus. And so what we're talking about is local connectivity between data centers. And then all of your traditional customers are accessed via the internet. But the majority of the workload that goes through, let's say, like a Facebook network or something like that, Facebook runs the largest private fiber networks of anywhere in the world. It's the same content being broadcast to multiple places. It's a Cloudflare problem. It's an Akamai problem. It's a very solvable problem where you just cache data locally next to the user. When you look at the financial services world, it is never run on the public internet. It always uses dedicated fiber because it needs higher levels of reliability and higher levels of performance and higher levels of determinism. You could not run a modern stock exchange on the public internet, and anyone whose firm trades on the exchange knows that you pay quite high prices for that co-location benefit. And so when we look at sort of the expanded world of whether it is the intersection of crypto and traditional finance, or if we look at the world of the AI data center evolution, what you need is suddenly fast connectivity between multiple locations. On a blockchain, you effectively have a point source market that moves around the world on Solana every 1.6 seconds, on Ethereum every 12 seconds. And so that moment means you need to rush all the data to that one specific location. If you are now trying to trade at levels that compete with traditional finance, well, you need the same levels of assurances for a market maker to say, I always know my execution time on the New York Stock Exchange is 4.3725 milliseconds, to just make up a number, down to that amount of specificity. On crypto, you have a variance of hundreds of milliseconds in how long it takes a market maker to get an order in. And so the reason that DoubleZero was built for crypto initially, and it supports many other things than crypto, is that we're now at a place where the performance of blockchains requires this. And so by building it as a protocol, to get to your second question, crypto is not going to trust Amazon to run all of the physical infrastructure.
Well, to date, we largely
We
have.
Yes, in many.
Problematic,
But
to say the least.
Yes, but to go faster than the public internet, which is what any blockchain system needs to do to be able to compete or even reach parity with traditional finance systems, it needs to be running on dedicated private networks. And those dedicated private networks need to be run by multiple independent parties. So DoubleZero is the first high-performance fiber network with multiple independent contributors. And that means we have 15 different contributors. Each one of them has their own admin access to their own systems. There's no sort of one central operator, like Google admins Google's network, Amazon admins Amazon's network.
Yeah.
And so in order for it to have enough trust to have crypto people basically be willing to use that system, it needs censorship resistance, it needs checks and balances, and that only comes from multiple independent operators.
Makes sense. Well, let's move into the present. I think we're at a really interesting inflection point for Bitcoin mining. Historically, the Bitcoin mining has only grown and grown in terms of the computational power it harnesses. But we're seeing, I think, a really big tipping point. Both of you, are not servicing Bitcoin mining anymore. And if we look at the headlines coming out, most Bitcoin miners are pivoting to servicing AI and HPC workloads. So Kerri, I'd love to hear from you. What was really the tipping point where you said, hey, we cannot keep Bitcoin mining as a business? If you strip away all of the narratives, right, and there's a lot of narratives out there on crypto Twitter, what are the core economic reasons that Bitcoin mining was not structurally viable for you as a business?
I think for TeraWulf, it wasn't a philosophical question. It was more of a financial question. Bitcoin mining is a phenomenal use of underutilized power. And when capital is cheap and hash price is growing, that's great. But when you introduce leverage into the system, it breaks, right? And so there's sort of three fundamental structural issues, if you will. Obviously, a tremendous amount of volatility. We saw that in the boom in 21 and then the crash in 2022.
Yeah.
There are no long-term contracts. And the equipment has a relatively short useful life. I mean, Bitmain is introducing a new generation every 9 to 12 months.
Wow.
And so when you look at that, it becomes very difficult to have a growth trajectory and a profitable growth trajectory on that model. And so when you flip to AI HPC, you almost have the opposite dynamic. You have long-term contracts with some of the most highly rated companies in the world. And you have the ability.
How did your cost of capital change when you switched to AI HPC?
So it's an interesting, I mean, for us, it was like going home, to be honest, because we come from the power background. And so steady Eddie is kind of the way we feel most comfortable in delivering our business. And so I would say our cost of capital on an unlevered basis is now sort of in the low 20s, where, you know, when we were mining Bitcoin, it's almost very difficult to even describe your cost of capital because it was fluctuating so readily, and we were in the position of having to seek rescue financing.
Yeah. Sam, for you as well, I mean, talk to me about what made you go through this decision to say, we just can't keep doing Bitcoin.
Yeah, it was, to using Kerri's words, it was both financial and philosophical for us.
It was philosophical for you.
It was philosophical I can get into that if you want. But financially, you know, I agree with the comment on leverage. You know, with leverage, you look like a legend when things are going up and you're a loser when things are going down. So when you introduce leverage into a Bitcoin mining business, when you can't predict the price of Bitcoin in order to meet your future liabilities, I don't know what Excel spreadsheet you're using, but that just doesn't work. So that is obviously a problem in Bitcoin mining. And I think a lot of people who use leverage to finance their equipment, that ended in tears, obviously. Also, I think Bitcoin miners didn't appreciate how the halvings were compressing returns. And I don't think they predicted, I don't think they were probably drinking their own Kool-Aid in a way when they realized that the hash rate was actually outpacing the increase in Bitcoin price. And that was something that Bitcoin miners did not factor in. And they just looked at the price of Bitcoin, and that's just half of the equation.
Well, and transaction fees have come down dramatically, right? So I think we'll talk later on. I saw a question come in about the long-term security implications for Bitcoin. We'll talk about that a bit more. I think it's very interesting. Austin, for you, you know, ISPs have historically been dominated by very large firms with a lot of capital who have a tendency to go bankrupt every so often, right? And then out of the ashes of these ISPs, you have people who come in, scrape together their remnants and launch new ISPs. Like, what were the conditions that were necessary for something like DoubleZero to be viable, right? Because this technology isn't new. Many firms, as you said, have been running dark fiber, private fiber for a long time. What are the key innovations and demand drivers that made you say this is the time to launch this?
Yeah, you know, one of my co-founders, one of his first jobs was working at Global Crossing. So he knows all about overbuilding networks and the resulting bankruptcies that come from that. So, you know, when we sort of look at this, there's a few things that have changed. So first, most of that fiber that Global Crossing put in around, you know, the late 90s, early 2000s is still in service today. This is physical infrastructure in the same way transmission lines are physical infrastructure. The way you generate electricity may change, the way you transmit it remains the same. And so in this model, what happens is the optical networking terminals, basically the lasers on either side of the piece of fiber, those get swapped out pretty quickly. But we can now do 800 gigabits per second on 160 different channels on one piece of fiber. And so that means you get 800 times 160 is a lot of bandwidth. And so this infrastructure that's been installed previously continues to be useful. This is why Northern Virginia is the data center capital of the world. It's because AOL put a bunch of fiber in there, and that fiber is all still useful today. And so as we look at this and we see it evolving, the cost of fiber is starting to come down because the rate of advancement in effectively the compression technology to put more data into the same wavelength or put more wavelengths on the same piece of fiber is increasing quite quickly. On the ISP side, ISPs are actually a pretty bad business at the end of the day. And they're great if you're a PE firm and you want 7% stable returns, the same way a power plant might be. But it's a business where you're always trying to optimize for the lowest cost possible. And that doesn't match at all with what we need in high performance systems. And so there's not anywhere in between. You go straight from using the public internet to having to spend tens to hundreds of millions of dollars to build a private fiber network, and there's nothing servicing in between now. And so we saw a real opportunity there with a bunch of underutilized fiber that a bunch of financial firms and technology firms have to create a system where we can effectively fractionalize that and make it available for many different types of users. And so being able to do that means that that incremental piece of fiber can earn proportionally more return at scale than it would be from someone just paying $30,000 a month to access that piece of fiber.
Very interesting. I was pulling up some random numbers earlier today. So globally, I think there's 1,800 TBPS of capacity, and you guys have 3 on DoubleZero today. Is that right?
Yeah, so the numbers are very hard to actually calculate. I'll say it sounds like we have a huge percentage of total global capacity.
I was going to be impressed, but
Yes,
you're
I mean,
telling me don't
please-
be impressed.
Please be impressed. But a lot of the stuff that private companies run is not reported in the same way. So that really is
Got
a
it.
benchmark against what the public internet can do.
At what size do you think the private internet is versus public internet? Do you think it's a 1-to-1 or?
It's very hard to
Okay,
say.
sorry, I'm putting you on the
No,
spot.
I think it depends on the market you're looking at is
Yeah.
what I would say. I think in terrestrial capacity, there's probably more in the ISPs, and subsea, it's probably around parity.
Okay, got it. So I have to have my number.
Sure.
Okay, good to know. So I don't look
But we've
stupid.
still got the 3.4 terabytes.
You do.
You have to have that number.
as a proportion of global available capacity. Kerri, you've moved towards this long-dated contracted infrastructure with AAA rated counterparties, as you said. Your Lake Mariner site obviously has a fantastic tenant. How does your risk return profile vary now that you're no longer subject to some of the cyclicality of Bitcoin? Do you worry about the durability of these contracts and this long-term offtake you've sold? Do you feel fairly confident that you'll have persistent offtake at the rates you've contracted? How do you think about the change in risk reward?
So again, I mentioned earlier, for us, it felt like coming back to our knitting in the power infrastructure space. And so what we look for is, the long-term contract, the highly credit-rated counterparty, but there's a tremendous amount of complexity around how you contract for that, right? Both in the lease and the financing agreement, so that if there are delays or if there are other things, you're protected, right? And you're not the one absorbing all the risk of that.
Do you also have performance SLAs, or is that
We do,
the DC?
yeah.
Okay.
That's a significant element of the contracts that we negotiate. And just as a side note, our tenant at Lake Mariner is actually building a dark fiber line from upstate New York to New York City, just as a,
Well, they should get it on DoubleZero if they have excess capacity.
Exactly. So we look to wash, rinse, and repeat. And I think I misspoke. Our levered returns are in the low 20s. Our unlevered returns are sort of in the low to mid-teens. But to the extent we can have visibility in our cash flows, finance our assets efficiently and similarly over and over again, and create that sort of steady. So when the market's going crazy, we're not chasing after the shiny object, but when the market's shitting the bed, we're also not suffering. So that's sort of how we think about our risk return.
Steady.
Yeah, steady Eddie,
Okay, when the data center bubble pops, you'll be ready with a bag of cash. And then how has, just as a total sidebar, I guess, you saw a significant re-rate of your public market valuation share price when you announced this very large, very financially stable tenant. I guess on that, how have you seen your ability to raise capital in public markets and in debt markets evolve? Are you seeing like a mass opening up of capital availability?
Yeah, so we've financed each of our customer tenant build outs in the financing market, and we've had a tremendous amount of demand. And so we are feeling very good about the structure of our business, the replicability of our capital raising, and the appetite that's in the market for this type of paper. So we're feeling pretty good about it.
And it's primarily private equity or specialist lenders who are focused on
So
AI?
we're looking at both credit lenders and then also project financing.
Okay.
Yeah.
Very cool. Sam, you obviously are in the early stages of building your publicly listed company and growing your market share. When you have to explain your business model to a more traditional investor, perhaps someone who's skeptical of crypto, which I think many infrastructure investors, they love AI, HPC, the Bitcoin thing, not so much. What do they most often misunderstand about your business?
I mean, that's a skepticism that is one of the main reasons why we decided to spin off WhiteFiber. WhiteFiber was a subsidiary to Bit Digital, which is another public listed company. And it just felt like it felt to me that Bitcoin mining was a retail product, whereas an HPC AI company is more of a institutional product, and those are two very different audiences. And so there was a lot of skepticism about, us going into the HPC business. We were a crypto company, and so the way we solved that was basically with a sledgehammer. We just IPO'd that business, which happened in August. IPOs are extremely difficult. I highly do not recommend. So,
I've been through one and we're going through another. It's horrible.
yeah. Anyway.
But lots of capital. Fingers
Yes,
crossed.
indeed. Yeah, we raised 140 million, and now we've become WhiteFiber's become a pure play AI HPC infrastructure, and there's no skepticism about there's no commingling of the crypto business.
Okay, got it.
In the HPC business. And one of the another reason why we did that was we had this credit facility with the Royal Bank of Canada, very conservative financial institution, and the credit committee just didn't like the fact that they were building this credit facility, even though it was for a data center. BitDigital, the counterparty, was a crypto company,
Right.
and it doesn't pass muster. So one of the things they said in order to solve that was make it a pure play. And so that's another reason why we did an IPO, to satisfy the credit.
Let's go off on a tangent for a moment.
do it.
Okay, so one thing I think is really interesting, Bitcoin obviously over the last 10 years has been much maligned from an ESG angle and also from sort of a societal impact angle, like it's money for criminals, etc. AI so far has been relatively unscathed, but it's really feeling like, at least in the US, AI is going to be the next punching bag for ESG and other sort of social warrior causes. Do you have any concerns about that in your business?
Well, we received letters from Senator Elizabeth Warren.
Oh,
Yeah, it was really interesting.
Oh, that's
not
so
not
fun.
at WhiteFiber, but at BitDigital when we were a Bitcoin miner, and she said we were destroying the world, and she, not just to our company but to Mara. And I'm not sure if you received that letter. I guess not, but it was to 7 Bitcoin mining companies that, and we said, hey, look, over 90% of our mining is actually on renewables. We were using hydro.
but nobody cared.
No.
Nobody cared.
Unfortunately.
Exactly. Nobody cared about that. So this whole ESG thing was a hype in media, but from a shareholding perspective, it didn't move the needle.
But do you worry about this with AI? I mean, I'm starting to see these rumblings. If you look at US residential power prices, if you look at sort of the populist rhetoric that's out there about AI destroying communities and driving up consumer I mean, does that worry you at all, given Canada in particular is a bit more like liberal bent than the US?
I think countries have a national directive for AI to flourish versus Bitcoin. There's a lot of merit to AI is a real. I'm not saying that Bitcoin's not a real demand. There's a lot of use cases for Bitcoin.
We're getting controversial.
I know my audience here.
So you're going to get mobbed after this. All the tiny knives are going to come
Right.
out.
But I think there's going to be some rumblings about energy usage for AI, but I don't think it's going to be at the same extent as Bitcoin miners.
And we've seen it too, not just about energy use, and that's why I think bring your own generation to site will be such an important element of business models going forward, because if you can demonstrate that you're a net generator or a net adder to the system,
Right.
that argument goes away.
Yeah.
But we've also seen concerns about identity theft and the social change that will result from AI. And so we spent a lot of time educating the communities that we're in, that we're building the infrastructure, right? And there's really no way to solve that existential question, right? And so a lot of it is misinformation circulating, but I think that whether it comes down to ESG, which we actually haven't had a lot of, I mean, our tenants are more concerned with ESG than our investors so far, or at least the communities.
Yeah, I would agree with that.
But it's more of what AI is being used for. And again, the misinformation, it's taking away all of our jobs. Well, actually, we're building data centers that are creating 500 permanent jobs in a location that lost its industry when the coal plant retired in 2019.
Well,
So
until the robots take the jobs, because I'm investing in data center maintenance robots. I'm coming for you.
Somebody builds those robots, so.
right.
In China,
Another
I
robot.
believe. We're going to
Another robot,
reindustrialize. Don't worry. Austin, I'll shift back over to you. I want to talk about the future. And I'm being a bit tongue-in-cheek, but I hope you can appreciate the sheer magnitude of money we're talking about here, and also the importance of this from a security perspective, from a sovereignty perspective. These are really material issues, I think, and we're only just starting to talk about them. Austin, I want to ask you some hard questions because you're at the Solana Foundation for a while. You've been thinking about tokens for a very long time. Where do you think, so today what you're doing, you have a token in DoubleZero.
We do.
Okay? Where do you think the real quote unquote use cases are, right? DeepIn so far has been largely very disappointing. Where do you think the opportunities are for stablecoins, DeFi, tokens in these new businesses that are getting built?
Yeah, I mean, I think we have to go back to the basics with a bunch of this, but apply it to totally new industries. And so the only reason we have a token, like genuinely the only reason we have a token, is we have 15 independent contributors that we need to organize around the same collective goal, who don't necessarily trust one another and have no reason. I mean, they have lots of reasons to trust us, but at the end of the day, they don't want us just sending them a report every month saying, hey, here's how much you earned. They want to be able to prove and verify this. And tokens are the best way to collectively organize greed towards common good from people who would normally not work together that we've come up with. It's a very natural evolution of a joint stock corporation applied to a slightly different problem than you apply it to. The problem with most DeepIn is it's still centralized. It's entirely centralized because there's one company behind it and they're making all of the devices that go out. And at the end of the day, most of those companies should have been traditional structures. I think with us, the difference is it's very hard to bring in a new party to a joint venture 4 years into that joint venture's existence. It is not hard to bring a new contributor into a token incentivized network because that system has its own rules and flows, and those do not require everyone else to vote to allow that new group.
So are my agents in the future going to buy connectivity directly on DoubleZero Marketplace?
Yeah, I mean, that really is the thing. When you look at it, every single retrofitted data center or Bitcoin mining data center out there, the thing that is true about all of them is they've never needed connectivity before, right? A Bitcoin data center needs 50 kilobits per second of connectivity. An AI data center needs as much bandwidth as you can possibly fit into it, which is why when OpenAI builds new data centers, like right along with the power and the GPUs, they're putting in terabits per second of fiber to link all of them together.
Kerri, can I buy some compute from you with stablecoins yet?
So I think in theory, yes. In practical reality, not for some time, because I think you're not only going to need to convince investors, but utilities, grid operators, that you can have a digital representation of a physical asset. So I think
that's the question of the industry. That's the $1 trillion question.
Right. And how long I mean, they're historically very slow moving beasts. And so I think that learning curve and ability to adopt it will take some time.
Sam, you're out of the Bitcoin game. Kerri is out. Everyone's out. Who's in? Who's going to mine Bitcoin? Who's going to keep the Bitcoin network safe?
I think sovereigns, I think nations will end up taking that over.
Which sovereigns, though, is a very important question.
Yeah, that's a political
pretty
question.
important. Who do you think it's going to be?
Well, I don't know which countries are going to do that, but I think that's another reason why Bitcoin mining is not good as a company, as an issuer, because eventually if Bitcoin goes to 300,000, and it probably will, there's going to be cyclical gyrations, but structurally there's long-term upside. You'll see nations getting into Bitcoin mining because they'll want to put that on their reserve, on their balance sheet, as it were. And so they'll mine Bitcoin, and their access to power is basically free, and you can't compete with that. So that's another reason why the Bitcoin mining industry is collapsing.
Well, I always thought it's been really interesting, instead of exporting electrons and hydrocarbons, export some Bitcoins. It's an interesting concept.
Yeah.
Something to think about. Okay, we have just a little bit of time left. I think as you look at everything that's happening, we read a lot of headlines. There's obviously a lot of differing opinions and viewpoints on the direction that the compute industry and just the general physical infrastructure industry is going. In just very short summary, what do you think the biggest thing people underestimate about this infrastructure build out is? Mine is the size and scale. It is already multiple trillions of dollars. It's the biggest physical infrastructure build we've undertaken in modern history, and it's still underestimating the size. So I think size and scale is mine. Austin?
I'm going to say something totally irrelevant to my business, but we are massively underestimating the power build-out requirements. And this entire industry is hard capped by our inability to put in any new capacity and build in any new transmission lines. And until we can put reactors at every new data center, like we're just burning a bunch of natural gas and we don't have the pipelines to deliver the natural gas to the data centers anyway, at the scale we need to get this to.
Yeah.
Very much agree. Sam?
Well, I think three things affected humans the most, which is electricity, internet, and now AI. And I think AI is the same scale, if not more, than electricity and the internet. So I'm in the camp that you just can't build as much data centers as possible. You have to just, this is an industry that just started, and it's already changing society. And by 2030, we'll be living in a world that's very different from today. And
no
that's just 4
UBI.
years
We're
from
going to
now.
get universal basic intelligence. You get a compute quota.
Elon Musk just yesterday said something super interesting. He said that doctors as a profession will not exist in 4 years because robots have a much better success rate in operating humans than doctors. If you look at medical aggregators.
My mind's going in interesting places. Kerri,
I
how about
think
you?
mine is to leverage a bit off both what everybody has said. I think the difference between the internet and AI is the internet was a platform that was built on the expectation of demand showing up, right? Now we've got demand here and it's insatiable. And so I think that is fueling the bill, and that's why it's sort of hard to quantify because everybody just wants more and they want it now. And so I think the build your own generation, or BYOG, is going to be a real differentiator and value creation, because if you can solve the equation by building a data center, but also having the skill set and the unique capabilities to align that with new generation, that's going to be a game changer.
Thank you so much. Everyone, give a round of applause to my fantastic and brilliant panel.
Thank you.